Welcome. As we start out on this second week of the third quarter, I thought I'd follow up on a trade idea that we had last week, which we were putting together based on the fact that spot gold on an hourly chart was looking at completing this double top pattern. And over the weekend, or going into the weekend, I should say, and coming out this side of it, we've seen a full completion of the double top. And I just wanted to talk about what this means for a trading potential or an opportunity. Let's look first of all at the pattern that we've got here. I've got four chart patterns here. There's the price action on top. I'll talk about that in just a minute. There's the MACD here, which is pointing lower. There's the stochastics pointing lower, and there's a relative strength index pointing lower. I want to pick out first of all on the relative strength index first of all, because when you get anything below this blue line down here, which is the 30 reading in this 100 index here, anything below 30 is oversold, which under normal circumstances will mean it's an opportunity possibly to go long. Anything that appears above the 70 line is overbought, and there it represents a potential opportunity to go short. But not is all that simple when looking at the relative strength index. I'll go back to this chart and I'll take off these other two layers here just to make it more simple to understand. Here we have this oversold level, and previously you can see we have been oversold and gold has continued to go down. Why is this? Well, that's the reason why is because being oversold can indicate that a trend is in place, and so long as you keep on getting lower highs and lower lows, you continue to follow that trend down despite the fact that it is oversold, which is where we are at the moment. So that's why the relative strength index on this occasion is not worth necessarily looking at. So all the indicators are pointing to a lower performance for gold, and that's exactly what's happening here. We've seen a completion of this double top pattern that went into this channel here when it appeared above the level here at 1217 back on the 15th of March 2017. Now at that point we had not really seen any pattern developing. When this first peak occurred and it dropped back and then hit this level here and returned, that was the beginning of the double top pattern. Since then we've got another peak here at that level there at 1296, just below the 1300 level. It failed to get to that 1300 and then started to pull back again, and the minute it hit this line here, which is the previous swing low, that is the completion of this double top, and it's the height of that double top which ultimately will give you the calculation as to where potentially gold is going to go. Now what I want to do before we talk a little bit about where this is going to go, I want to overlay one other technical analysis chart on this, or tool on this I should say, and that is the Bollinger Band. When trade gets outside of the Bollinger Band, it typically comes back in. There's two things that happen. First of all, the Bollinger Band expands to fill the space, but you do get these trades outside every now and again. On the downside you'll get a pullback and there'll be a rise. On the upside you'll get a pullback and there'll be a fall, but it tends to trade within this level. And here you'll notice that in the last few days we've seen this disappearing below the edge of the Bollinger Band. Here we have the Bollinger Band expanding down here to cater for the trades that go outside. So not only do we get a little bit of a recovery potentially on a security when we're outside the Bollinger Band, but also this band is expanding. Here we are now outside. You can see that the shape of this candle indicates that the bears have taken it down outside, but the bulls have pulled it back in. We could well get another day or two of rises. Now if it does rise and it closes above this line here of support, there's then question marks as going to be whether or not the double top will complete. At the moment at least we've got a completion of the pattern, but the extension down here is where potentially we could well see the bottom part of the trade of this cycle for gold. Now at the moment we are trading at 1207. Take the height and the bottom of this trend line, of this channel line here, and replicate that, and you get down to this 1132 level, which coincides roughly with the bottom that we saw here back on the 16th of December at roughly 1132. So it would seem to indicate at the moment that everything is set up for a trade which ultimately may well resolve itself right the way down here. And don't think it's going to go in a straight line, but we are getting these lower highs and lower lows, which is very characteristic of a completion of one of these sort of patterns. It is a reversal pattern. We went into it, got those two highs, we're reversing out of it, and we've got potentially this lower low here. Now if you do go short on this, you want to put a stop well above the last point of resistance, and the last point of resistance is here at the 1229 level. That to some may seem a little bit close, you want to go a little bit above that. And in the event, if it is a little bit close and you want a stop that goes a little bit further out, which means you take on more risk, you're then looking potentially at this candle up here, just a little bit above the 1241 level. But at the moment, at least, it looks like it's going to resolve on the downside.